All right. Hey, everyone. I'm here with Jeremy Pope. Hey, Jeremy.
Hi.
Hi. And Jeremy is one of our preferred lenders with PRMG. And I am so excited about this partnership. But first, Jeremy, can you just explain a little bit about your background, how long you've been in mortgage field, and just a little bit about you?
Of course, of course.
Great.
Equally excited to team up and in this partnership. I have been doing this about 8 years now, and for the first 4 years, I worked for another mortgage company,
Hmm.
and then about 4 years ago, got an opportunity to have my own mortgage branch,
Cool.
and couldn't ask for anything better. It's good for me, it's good for you, and it's certainly best for the clients.
So, how do the clients benefit from you having your own branch? Like, what does that mean for them? Why do they care?
So, a bank can structure themselves in many, many, many different ways.
Hmm.
Typically, the more a loan officer or more a bank makes, the higher their interest rates. So, if you can keep your overhead extremely low, then you don't have to have big margins, which
Hmm.
means then you can provide the lowest interest rates humanly possible. That is the model that we have taken,
Okay.
and people are loving it.
Well, I know that the clients that we've sent over to you, they're like pretty shocked at the interest rates. But can you just explain a little bit about why banks would have different interest rates? Because we all hear on the news like interest rates are blah, but like
Right,
they're not just one
right.
set. So how does it work?
So it's a little bit different right now because we are in the middle of a global pandemic. So
We
you have
are?
a lot. Yeah, yes, we are.
You couldn't tell by the
um,
amount of real estate that's being sold.
sure, I know, I know. It's
Right.
it's shocking. I think sometimes we forget those in real estate where it's crazy
Yeah.
busy. But yes, we are, and I'm not a doctor, but
Yeah.
that's what we're hearing.
That's what, right,
And
exactly.
and there's a lot of banks that are just very uncertain about the future,
Okay.
so they are raising their minimum credit standards. They're raising the minimum they want people to put down. The reason they're doing that is because they're just really not wanting to write loans for anybody right now. However,
Oh,
it is illegal to just turn people away. I can't, as a bank, say, you know what, due to COVID, I'm just not lending you any money. That
okay.
is a direct violation, discrimination, probably at that point. Bad, bad, bad
Because
stuff.
they're supposed to make loans. I mean, that's the thing, right?
Yes, yes.
Okay.
So there's two ways that banks can kind of push people away from themselves and also remain compliant and not get sued, of course. So they can raise their minimum scores, raise their
And
minimum
most
down
everybody
payment.
did that, but you,
Exactly.
as far as, I
Exactly.
mean, there's probably a couple of others, but you're the only one that I know of that hasn't done it.
Yes, yes. We've kept things where they're at. I
And you're
think
allowed to do that, I assume. I assume
we
you're not
are
breaking
we
the
are
law.
100%
Okay.
allowed to do that. Yes. For example, and I'm only throwing this out there because it's already out there. It's well known. Not throwing anybody under a bus, right?
Hmm.
Chase Bank, for example, just went to a 700 minimum credit score and 20% down on a purchase or 20% equity for a refi. They are
So if,
clearly saying we don't want the loans. We
got it.
only want top tier because those are easy.
Yeah,
They
that
can
makes
handle those, I
sense.
guess.
So, like a bulk, I imagine that a bulk of the people that are asking for a loan, they don't necessarily fall under either that high credit score or that 20% down. So
Um, I,
they're,
Yes, yes. I don't see a lot of both of them happening at the same time. There's a lot of people that have 700 plus credit, and it's just the down payment. Home prices continue to go up,
right.
and when you're talking about two, three, $400,000 houses, we're talking about 40, 60, $80,000 down payments. Um, it's just hard to do in our
Well, and not
world.
to mention, I mean, I would venture to say it's almost financially irresponsible to
It
spend
is.
your cash when if you get it loaned at 3% or something around there, you can make a bigger return somewhere else. So like why would you do that? That makes no
A-
sense.
Absolutely hit the nail on the head. You took the words out of my mouth. Even for someone who has 20% down, when you look at what their payment would be with
It's like
20% down, as opposed to
10%
5%
or
down,
5, yeah.
yeah, I mean, we're probably talking about 40, $50,000 less money down, but only maybe 120 to $150 payment difference.
Right. It's not worth it. Why would you
No,
spend your
no.
cash when you, yeah.
I look at it as, if someone is going to take a $200 a month higher payment, but they need 60,000 less to close, I
Hmm.
always present it as, well, let's say you did that. How long would it take you of saving that money to get your money back?
Right.
Usually that number is no less than 21, 22, 23 years. And you and I know that they're probably not even going to live in the house by then. So
No, they
they're
shouldn't.
never
It's
going to
very
get
bad
their
for
money
business if you live in your home more than 5 to 7 years. You should
back.
always be moving.
Exactly.
Okay, so you're saying that many of the banks have looked at kind of what's going on today, maybe have a concern about the financial stability of the borrower. And so what they've done, because they can't just turn them down, so instead what they've done is raised the credit score and or raised the minimum payment to take those people, like they're basically then self-selecting out
Yes, yes.
of the market. Okay.
There's also another way to do that, which we are seeing. Again, we're not doing any of this, but
Yeah.
just speaking about the market in general,
Right.
you don't have to raise the minimums or you don't have to raise the down payments. If the market is producing 3% interest rates and I'm trying to not take on more volume because maybe I'm overloaded or something, which
Right.
just can't handle it all,
Mhm.
clear out the pipeline, so to speak.
Mhm.
They will, what if I threw out a rate of 5 while everyone else is at 3?
Right.
Well, there's another way to push them somewhere else because I can't legally just say, you know what, I just don't want
Well,
to do the
being
loan
in
because
like being in real estate business and rentals and we remodel a lot, that's a contractor trick. They'll say, in order to do what you want to do, it's going to be like double what it normally is because they're busy or whatever. That's the same
exactly,
philosophy. I
exactly.
gotcha. Well, I
Yep.
think that's really helpful. And one of the things that one of the reasons why we're partnering with you is because you will take the time to explain people their different options based on their specific needs and then really extrapolate out the math so they fully understand.
Yes.
And
Yes.
you have a lot more flexibility in what you can do depending on their credit score. And you didn't raise yours, which is
Right.
awesome,
Right.
and depending on the down payment that they have. So I think that's really good.
Correct, correct. To speak on that a little bit more, I
Hmm.
try to take a numbers approach
Hmm.
because honestly, if you don't look at the numbers, what you're just kind of playing with emotions now.
Yeah.
I've never been a believer in finances and emotions. I think bad decisions are made.
That's how you end up with a Lamborghini or like a Gucci purse.
Exactly, exactly.
When all
So,
you really should have is like a Honda and a
right,
TJ Maxx
right.
purse.
So what do the numbers say to do? Because
Yeah,
numbers never lie, period.
right.
Right. So it's a really good approach. It works out for us very well. And of course, the numbers clients that gravitate towards that absolutely love it. And everybody else, can see the big picture.
Right.
They don't feel like they're being sold by a banker.
Or taken
That's not what
advantage
I'm
of or
trying to do.
whatever. Like they totally get it.
Right.
Well, I want to let everybody know we are going to be doing like a series of videos with you, just kind of explaining not only the market from a mortgage perspective, but just like kind of how things actually work. And so
Sure.
people can head over either to the Team Synergy Facebook page or either one of our personal pages too to kind of see. So the next
Absolutely.
video that we'll do is just talking more about how to work with banks and why you should maybe get second opinions. So if
Sure.
people want to head over and they'll find that video. Well, thanks a lot, Jeremy. I really appreciate it.
You're welcome. You're welcome.
Have a
Thank you
good
so
one.
much. You too.